Well, members and guests, I hope that you've enjoyed your lunch. And thanks for your attention now as we introduce our speaker for today. Thank you. So I'd like to introduce and invite Mike Kuroda, partner from White & Case, to the stage to introduce our guest speaker, Stuart Tonkin.
Thanks, Sally. Hi, everyone. Our guest speaker today is Stuart Tonkin, Managing Director and CEO of Northern Star Resources. Stu is a mining sector leader with more than 25 years' experience as an operator, contractor, and leader. He joined Northern Star as a Chief Operating Officer in 2013, was appointed CEO in 2016, and became Managing Director just over a year ago. Stu played a key role in Northern Star's exceptional growth to become an ASX 50 company and one of the world's leading sustainable gold producers. In the past year, Northern Star sold 1.56 million ounces of gold from its 3 world-class production centres in Western Australia, including the Kalgoorlie Super Pit, and in Alaska, where Northern Star operates the high-grade Pogo underground mine. Like so many leaders in Western Australia's mining sector, Stu graduated as a mining engineer with honours from the Western Australia School of Mines in Kalgoorlie. He began his career with Elton, gaining practical underground skills and a contractor work ethic, then built his technical skills as a production engineer with New Mining and Owen Hegarty's Oxiana, before joining leading underground mining contractor Barminco as Chief Operating Officer in 2006. When Stu joined Northern Star in 2013, the company was a single mine producer with a market cap of $350 million and annual production of 100,000 ounces. So it's been an incredible journey over the past decade. Away from work, Stu loves nothing more than spending time with his wife and 3 young children, either on their family farm south of Perth, camping and fishing in northern WA, or on a ski slope, anywhere there is fresh snow. Members and guests, please welcome Stuart Tonkin to the Melbourne Mining Club.
Thank you very much. Not too much snow in Western Australia, so I do take that opportunity when I can. Look, first I also would like to acknowledge traditional owners, largely on all of the lands in which we operate, and absolutely pay our respects to their traditional links to those lands across Alaska, across Western Australia and the Northern Territory, and pay respects to elders past, present and emerging. Fantastic. The guest list here today was outstanding, quite surreal, coming from Western Australia, presenting in this fantastic hall, but also in front of this fantastic crowd, prestigious crowd. I won't go through the distinguished guests. I know we've spoken about them earlier, but it is a full house, and I appreciate you all turning up to hear a bit about myself, a bit about the company and views on the sector. Look, it is a pleasure and an honour to be here for the Melbourne Mining Club. I would like to thank, obviously, Chairman Richard Morrow down on the lead table here of the Melbourne Mining Club, our co-patrons, Hugh Morgan, again, down the front here, Lee Clifford, who can't be with us today as well. And I'd also like to acknowledge my chairman, Michael Chaney, AO, with the chair of Northern Star, and it's been great working with Mike in the last year. And I was a bit suspicious why Mike was so keen to join me in Victoria for this trip, and I remembered when I was at Mount Buller with the family a couple of months ago that plus 70s, they ski for free. So I was just thought I'd check, but the lifts are shut, so it couldn't be that. But I'm pleased that you could be here with us, Mike, and joining us today. And look, welcome all to this presentation. So what I'm going to cover, hopefully this clicks forward. Look, what I'm going to cover off today, it is a bit about me, it is a bit about my experience, it is a bit about how I've formed my views, and they are my views, please don't take them as company, but it's how I want to really relay my experience in this sector and how great it's been, and how great it's been for many people. And so I'm going to go through a bit about my background, which explains how I think and why I act the way I do, but also how this experience relates to Northern Star along the journey, nearly a decade been in the business. The fundamentals that I still focus on, that I've honed and refined, distilled over my career and journey, and focus on and share a bit of that with you. Get your pens out for that lesson. And then ultimately how that translates through to the challenges that the sector faces and the forward-facing future in that regard. So hopefully we'll have a bit of fun. And literally, one of the key ideas of mining, it's easy to not be here. So you've really got to enjoy it. You've got to have fun, and if you're not having fun, you certainly aren't doing it the right way. So you heard a little bit on the entry of what I did in my early career in contracting and through there, and it's been integral to the way I think, and it's been integral to how I was brought into the industry. It's working here. Underground contracting, so absolutely has driven my career, and if you kind of think back to that era, early 90s, joined into the industry. Hugh Morgan was leading Western Mining in those days, and it was a really interesting dynamic period. But prior to Hugh there, you had the era of Keith Parry, Barry Patterson, even Avi Parvo. In fact, I was born when Avi Parvo was heading up Western Mining as the chairman, managing director. So I came in at a very fortunate period where the sector wasn't booming, there was change happening, there was attitudes changing in society around safety, there was attitudes changing around productivity costs. Gold price was probably about $250 an ounce. So there was a lot of things that I wasn't aware of at the time, but it certainly shaped the outlook and the thinking for me. So what was born out of that era, the Western Mining, was this contracting pedigree that a lot of those leaders in that business went out and started. So your Peter Bartlett's, your Steve Coglin's, John Urovich's, even the Ronnie Sayers, Bryden Rodens, they all went and started these contracting enterprises that then fed back into the mining owners. And what they did do is drive a lot of the productivities that happened across that. And unfortunately couldn't be here today, was coming Graham Smith, one of the founding members of Elton Contractors, who's based in Melbourne. He was integral to my entry into this and how I looked at things. So essentially, Graham, along with Patterson, Boddicker and Harkin, who started Elton's, when I was 16, Graham Smith selected me for a scholarship to go to Kalgoorlie School of Mines. And I didn't know it, but basically I went up there to Kalgoorlie at 17, and Elton's paid for me to study. They gave me work in my time off vacations and indoctrinated me into that pedigree of you just got to work hard and get on with it. So this is a picture of me charging up. This is up in the Tanami Desert with Elton's early days, but they moved you around a lot and you saw a lot and you saw many operations. But fundamentally what was driven to me was about working smart, not hard, because when you've got to break rock and move it, it's going to bounce back at you. So it's about really working through those contracting pedigree. And when you look at the Alamackers that I worked on with all the Canadians, convinced me that Canada was a better place to work than Australia. I tried that out. I went there as a petroleum engineer, which I'm not, and worked in the Canadian oil fields, and very quickly going from plus 50 degrees C in the Tanami Desert to minus 50 degrees in northern Alberta. It did teach me some patience and persistence, but it wasn't for me, and I quickly returned back to Australia and worked in contracting with Barminco. But it's an interesting concept of why was contracting and why should contracting always be a part of our sector, and generally why innovation and competitiveness is a healthy thing to have in any sector that drives performance. So that contracting gave me that fully practical experience in techniques and mining, and that before I even got a look in the technical space. That came later with Newmont, Oxiana, and I got the technical skills and design stuff. But it was really the how things were built, and bring it back to that. But it taught me productivities, pieceworks, how you're remunerated, rewarded, unit costs, fundamentally risks. So risks in many ways, risks in safety risks, in tragic fatal accidents. I think the first year I worked underground, there were 6 fatal accidents in our company. Really resounding, my mother asked me, what industry have you joined? So your attitude towards influencing an outcome, a positive outcome on changing that, as an engineer, as a professional, understanding there can be a better way and you need to be part of influencing and changing that better way. Risks just in financial losses, and in contracting, they are sudden, rapid. They are continuing until you intervene. Multi-million-dollar losses on a monthly basis if you don't act quickly. So they are very real, sudden, quick things that teach you hard lessons very quickly. Then you look into their risks that you're seeing in your operation, and then you look at the other cyclical risks in the business. So having exposure in contracting, I got to work across copper, nickel, zinc, gold, tin. These were different commodities at different cycles that really moved as rapidly as they do, as you know and as you experience. But things like the GFC that came kind of midway through that early stage, the rapid response to what happened, and we closed 6 mines in 6 months. That's how rapid that was, and I think it was over 500 jobs lost. More than people in this room lost in that rapid period of retraction across nickel, copper, and we tried to bias and push it to gold. But those are those real sudden shocks that surprised a lot of people. Whether it was low probability or not, people weren't prepared or didn't know what to do next in those environments. So it taught a lot of that. And then you start putting a lens of jurisdiction risk in as well. So, this clicker. There we go. Jurisdiction risks, and look, I thought a coup was a chief operating officer until I went to Africa, and we had a lot of coups not in Ghana, in Mali, in Burkina Faso, in Egypt, the Arab Spring. We had a lot of things change. The police went away, the army turned up, there's tanks in front of banks. This is serious stuff. DFAT are sending Qantas planes into Egypt to take out the Australian tourists, and we're flying in on those planes going to work. So there's things there that from a jurisdictional perspective, the risks and the understanding for what the resources sector does, it's phenomenal the effort and the energy that goes into developing countries and the risks that we take on. And I think sometimes shareholders need to be patient and need to understand and support those frontier, pioneer type people and companies that go and do that, because the benefits globally to civilisation are very sound, and the export of Australian skills globally is absolutely improving safety, quality, cost profile globally, and as well as general skills and livelihoods across the nations in which we export that skill. So really proud of what I've seen in what we've done. And again, it's an Australian-centric, Western Australian-centric, School of Mines-centric view of the world, but it has been born from seeing and experiencing that. And even in my own travels and experience, talking at the table earlier, through mines throughout Latin America or otherwise, through the Potosis in Bolivia or El Tenientes in Chile, you see very different standards from remote loading from the surface in El Teniente versus hammer and tap mining still happening today 1,000 kilometres across the border in Bolivia, because of the structural settings that sit in that sovereign risk or the governance around that. So it is really interesting to dial back out and understand why things are why they are, what you can change and what you can influence. So really winding into what are the risks that we can control, and simply what are the risks we can't control. So how does that now look or is influenced for Northern Star? And early days when I joined, we had a very active, motivated, interested business development team, and I think we had 84 projects on the go when I first looked at the screen of that filter. I thought it was sort of things we'd looked at, but it was actually 84 letters in the post offering to turn up and buy their mines that were the analogue to Paulson's. So we had to really quickly zoom in and bring that back. And essentially I got a big map of the globe, put it on the board, gave the team all a texter and said, get up and cross out the countries that you will not work in. And fortunately, like a lot of people who had that African, Latin American, Asian experience literally went to the place they'd worked and crossed it out. They didn't say, I'm the expert at that. They literally walked up and crossed it out. And then I said, okay, now get up and cross out where you wouldn't take your family, where you wouldn't take your kids on a holiday, because we're going to ask people to go and work there, and we're going to accept the standards that people work there. So they got up and crossed a lot of things out, and we literally brought it down to Australia and North America. And I know that's fussy, it's biased, it's prejudiced, and I know there's great opportunities in ore bodies all over the globe, but you've got to get fussy and you've got to have purpose and really look in on what you do and why you do it. So our purpose as a business is to deliver superior shareholder returns, and the how we do it is coming back to us sticking to our knitting, knowing our skill set and focusing. So the what is gold, the where, the tier 1 jurisdictions, and it's lower risk. I won't say it's no risk, but it certainly is lower risk. So this is very deliberate. When you look at our business, it's very deliberate. I say less surprises because Africa, it's not just a case of a different government, but back in 2009 when we established the Sakari mine in Egypt, and that was when Gillard changed the Australian or the foreign income tax ruling. So you had 90 days offshore, you could get tax-free, but that point changing so that wherever you worked around the world, you still paid Aussie tax. That eroded for 4 years my margin in Egypt because my expats were expecting it tax-free. So unless they left Australia, we had to absorb that and cop that. So there's still things around developed countries and governments need to understand the impact, the knock-on impact to exploration budgets, to cost structures and cut-off grades and those things, that simple structural changes that companies have multi-decade outlooks on can have an impact on those financial investment decisions. So for us, look, gold is simple. It's a currency. It has been for 7,000 years. It will be for many more. It shouldn't need much explaining. And we control doré right up to the bar of doré, get it to the refinery, and we literally sell that with T+2 days later. We don't have to deal with the concentrate shipments, the TCRCs, the backwardation in pricing, logistics in getting it through ports, smelters and the like with base metals. And I am promoting up gold here, you might see. But for us, it takes away risk. We focus on underground mining skill sets. We control that well. We want to remove parts that distract us or would drag us backwards. So gold is perfect for our remit. And where we do it. We'd like to know the rules of the game and know that the rules aren't changing halfway through the game. So that's why we really focus on the jurisdictions we're in. And it doesn't mean that every state of Australia or every state of America or province of Canada are perfect either. So what does that mean for everyone here? It doesn't matter what you mine, I guess, or wherever you choose to do it. But for me, the fundamentals are constant, and every engineer loves an equation, so I'm going to give you one today. And this is your time. You can take a photo of this, you can write it down, you can plagiarise it, sell it, do whatever you like. This is free, and look, if this is the legacy I leave on the industry, I'll be a pretty happy engineer indeed, because I just love formulas. So I'm going to give you this nugget today, and it's the crunch, right? So I basically can't bring this down to, there are only 3 ingredients that make a mine. And they are minerals, maths, and motivation. And I'm going to give you exactly what these are. So minerals, it's the revenue. It's what's worth something. Without minerals, we've got nothing, no mine. Our geologists work hard to find minerals in parts per million, even in parts per billion. They'll look and find this stuff. Doesn't mean it's worth anything. You've got to find someone who wants to buy it, pay you something for it. The maths part, the engineers love. It's the costs. It's the feasibility studies, the bankable feasibility studies. It's iterating mining methods, unit costs that you apply to that mineral to make it economic. Mineral on its own might be a great technical success, but can you get it out efficiently at a margin? And finally, the motivation part, the people piece. Without this, essentially the difference between all of these things is whether this is profitable, whether it is actually ore or waste that you are mining. And absolutely these three ingredients, without one, they'll close and open mines. And I say mines and mines, M-I-N-D-S, which ironically is where I thought I was going to go study at the School of Mines, M-I-N-D-S, but I didn't think I was going to be smart enough until someone told me it was mines. But this is how we think, this is how we act. And the example I wanted to give for the room, and there's some probably associates in here, I think there's 29 metals, there's some EMR, probably some ex-Oxianas, certainly EmCee in the room. The example I want to give in this equation is Golden Grove. So Golden Grove, I'd worked for Newmont and I'd closed Mount McClure, Bronzewing, sort of mining manager. I went to Golden Grove and it was a gold mine for Newmont, 100,000 plus ounces. But basically, the mighty ox, Owen Hegarty turned up and acquired a copper mine. I think he might have paid maybe 280 odd million bucks. Quickly from turning up as a copper mine, within 1 year we pivoted, we turned it into a zinc mine, and we paid it back, I think, within a year, the acquisition cost. So when you kind of go through the minerals, this is a polymetallic system. It had, primarily copper, zinc, it had lead, silver, it had gold, obviously, as byproduct, had some other things kicking around that probably weren't so good. But the interesting part was, on that equation, someone designed a block model that told you how much things were worth. If you didn't keep refreshing and modernising that and understand what that mineral was, what your primary stream was, you could get lost. And I was amazed when I was in the mine looking at it as a gold miner, operating it, going, why are we walking past 100s and 50s to pick up 20s and 10s? It just didn't make sense to me. So when Oxiana came in and refreshed the economic outlook on it, we pivoted to zinc. And zinc was half the price of copper at that time. So people would say, well, why are we pushing copper? Why are we pushing zinc? We should go for copper. But the zinc was five times the grade. So it absolutely was the priority of the day, and it certainly made, at the time, Oxiana very successful. And the motivation piece with that was an owner-operator, and I'll say owner-farmer, because they were all the Northampton farmer, Geraldton farmers that built the mine. I pitched the underground contractor Roach against the owner-operator team and really drove competition, drove productivities, and got the volumes and that up to meet and fill the mill. So really proud of what the team did there. A great success story that, again, just reiterates this formula can apply to most things. And when you look at that now as how does that feed into Northern Star? So this is pretty interesting. This is the same recipe. It's the same way we've thought, the same way we've applied things. And when we go through these mines, each of these mines were purchased from a major, much bigger company than what Northern Star was when we acquired it. The metrics I'm going to put up, essentially reserves, okay? So what we acquired, and then what was produced and what still is there as reserves. So the small little grey bar was what was purchased, and the uplift there. And Paulson's, this was a company maker for Northern Star, from a 1-2 cent stock. This was the cornerstone production asset that Bill and the team recapitalised the company and acquired. So the metric here being reserves, profitable ounces, things that make money, things that matter. And there's lots of other metrics we can put in here, but this is the key one. When you start to look at the journey, plutonic, that Paulson's was a 14 times uplift. Plutonic, Kandana, Jundee, 10-bagger, that's a great one. South Kalgoorlie, 3 times. Carasoo Dam, Saracen, they really, really grew this, and Thunderbox. Pogo, just getting started, already 3 times. Mount Charlotte, I only had this a couple of years, 5 times, reserves. Some of you maybe even worked 60 years ago, no, yes. Mount Charlotte. it's still there. It's a 5 million ounce system that's been mined 3.5 grams, 60 years has been running, and it's still got a huge future in front of it. And this is the one I love, the super pit. We've finally got the super pit now under 100% Australian ownership. And we've broken the joint venture. When Bondi locked this network of leases and undergrounds and open pits and companies together 30 years ago, it was around that big image of the consolidation, liberating synergies, getting economies of scale. Although he probably had no clue of mining, it was the right thing to do to consolidate and share and pool those resources in Kalgoorlie. So very proud that the motivation and drivers around the merger to get this asset in one ownership, in our backyard, and really optimise it. We're really just getting started here at the super pit. And all of these, the fundamental equation that we've applied to all of these success stories that's been Northern Star today is simply dedicated people looking, driving, exploring for that mineral, applying maths, whether it's not just one cookie cutter mining method. You might have 3 or 4 mining methods in the one operation to really drive the economics. Understanding what's a profit, what's a loss activity, stopping and starting those things as you need to, and adjusting to those assumptions as they change. But that motivation piece, I would say we've burnt a lot of people out too, just driving, pushing, in making sure that we're hungry and we keep that burning platform there, because it's easy to get a Northern, get a management-proof asset. And I don't want to derate the exploration success here in your state, in Victoria, but we haven't had a swan zone that's blessed, and the fortune of a swan zone here that's blessed us with a discovery or a grade uplift. This has all been grind, hard, productivity-driven, economies of scale, upgrading work to really eke out the value. And on a sustainability state, like recycling assets, capital that's been sunk, it's a really responsible way to not just shut down and walk away from these things. So it would be terribly sad to look and see these mines closed when they actually had a future. So that picture right there, if you look at where Northern Star started with that one mine at Paulsens, 10 years on, we're a $10 billion market cap company, we're ASX 50. We employ 6,000 direct employees, contractors in our operations, plus all the downstream suppliers, contractors, procurement. There's over $4 billion of value add, economic value add per annum. Over the journey, we've only raised a bit over $1 billion in equity to acquire these, taken on debt as well. But we've paid back over $1 billion in returns through dividends to shareholders across that journey as a reward. So, super proud of what we've built, and we sit here today with a 20-plus year outlook on 54 million ounce resource, 20-plus million ounce reserve base on assets that were unloved, underinvested, and discarded by much bigger and smarter people than myself. So with that, I still see 2 real issues facing the sector. And I've recently returned from the Gold Forum of Americas down at Colorado Springs. And it was a gold-focused forum, but the themes are very generic across commodities and sector. And the 2 things I see, and they're somewhat linked, sentiment and skills. And the sentiment piece, there's confusion out there as to what we do as a resource sector and why we're necessary. So I think we have to do a lot more in promoting our relevance. And I know I saw obviously the EmCee ad up there earlier to see that. There's some great initiatives by ourselves telling our own story and explaining that, but we need to really drag and bring along a lot of people with us to understand the significance and importance of why globally civilization needs the resource sector to be strong, fit, safe and environmentally responsible. Those responsible practices we can promote and really highlight the rewards that the sector delivers to civilization and society. And so I think up on the left-hand side here are the sustainability reports that we publish. They go through and talk about sponsorships, donations, education, investment, environmental stewardship, all of the things that all great companies are doing every day anyway. But I think the audience is quite finite who already knows the sector that looks at that. We need to really reach further and get the generic rhetoric out there that people look for us for help, and they understand that we will modernise and deliver the minerals that society needs in the future to develop. The skills piece is an interesting one because we've experienced it recently, but it's linked to the sentiment. If you want to sit around a barbecue and someone says, "Oh, what do you do?" "Oh, I'm a miner." "Oh," and they walk off. You really want to see that people are, proud to be involved and are attracted to, and that education piece, early days, feeds into that skills. We can always pay more, import, skills or do these things, but it is something we need to reliably, always, throughout the cycles, invest in. Very proud about our plans and skills investment around scholarships, around early education pieces, apprentices, early trainees. But, in our business, only 10% of that technical lens. So geos, mining engineers, survey, met. There's about 300 geos, 200 engineers, 50-odd mets, survey. I was going to look at table 26. I think all the students that are there, you're all hired. Northern Star. I'll leave them a card thereafter. Thanks for Gecko for sponsoring you I'll give them a recruiting a bonus as well. But for the students that are here and looking and seeing what the sector can be, we also need to feed it back into the sentiment piece and people be proud on the sector that we're entering and addressing. And not face that societal backlash that we do see. So the reporters here as well, and I know you're favourable to the resources sector, but the reporters in the room, try and weave in that positive stuff as well as how much I earn or, what we did to some tailings dam or cave. Like, they are serious issues and they need to be addressed. But try to just balance up the rhetoric on the great things the sector is doing, please. So with that, I want to leave time for Q&A. So when I kind of look backwards 20 years ago, look, I'm here, and I'll say mid-career. Mid-career because plus 70 jokes might not make it a shorter career. But I look back at, what was 20 years ago, what I saw, what I came into, and you had to be very resilient. You had to put up with a lot of stuff that you just had to put up with. And it needed to change, it has changed, it still should change more. And I'm really pleased that that momentum's going there. But I think we also should, applaud how far we've come and how we keep modernising it. In that top photo, there's no bolts mesh there, no ground support. I got my safety glasses in my top pocket so they don't get scratched. Down below in the oil fields, like if I applied the Australian method, which was if that tool didn't work, just go and get a bigger hammer. Again, you need to modernise and bring technology along with us. And then I look into it now. So really pleased with where, I'm personally positioned in the influence on renewing, refreshing, driving change in the industry, certainly where the industry is positioned itself. But there is still lots of work to do, and I think particularly around the sentiment and the skills that we need to feed into. And I guess if I jump forward in 20 years' time, I certainly hope that the super pit turns into a super underground. It will be. And I hope that I return to Victoria and enjoy ski for free in my 70s on fresh pow. So with that, I'd like to take the opportunity to turn back over and maybe some Q&A. Thank you very much.
Thanks, everyone. So Richard Shoddy and Sam Street are out there with the microphones. If you do ask a question, please share with us your name and your organisation. And I think we've got one over here.
Yeah, thank you for that presentation. Adrian Prendergast from Morgans Financial. And one of the interesting things that we always think about, is it better to build or buy a mine? And certainly your team and company have done a great job deploying the strategy of value accretive acquisitions to build into quite a formidable resource player. But in the last 12 months especially, that the landscape of building has changed quite a lot in a negative way. And when you look out to future growth as an industry, but also for your business in terms of future opportunities, how do you weigh those two in the long term? Do you think it just reinforces your approach to building on acquisitions, or do you think there'll be an opportunity to pick up some cheap early stage assets?
Yeah, so it's a good question around individual company strategies about how they build, and what built Northern Star in early days won't necessarily be how we build and sustain going forward. The same strategy, you grow it up, but the question is, should you build or buy? Well, if no one builds them, there'll be none to buy. So all I'd say is keep building mines, everyone, please. Economic mines with the maths the right way, and then there will be this refreshment. But M&A is a very healthy reset. You'll see the majors that are on this 5-6 million ounce per annum in the gold sector, they can't discover 10 million ounces a year just to stay still. So they are going to gobble up 2-3 million ounce producing companies just to pad out and keep that weight in those big majors. So M&A in that side of things is natural, but if someone's not putting that exploration dollar on, if the Mark Creasy's aren't out there kicking spinifex and hitting rocks with hammers, then these early sign things. So there's still some really great discoveries. So great to see the Fosterville, the Swan Zone in the brownfields footprint. But it's also so good to see a De Grey out in a new, in the Pilbara, finding big, large 500,000 ounce gold capable sort of systems. So yeah, I reckon in that we'll keep our strategy of M&A to us. But there is a cycle where you buy or find, and you work your way through each of those, and we're capable of doing both successfully.
Hi, Stuart. Monique from AusIMM. Thanks for the great presentation. You spoke about the challenges facing the industry and sentiment towards the industry. So I just wanted to hear from you around, the environmental challenges and net zero sort of discussions happening. What's the Northern Star and the gold mining sector in general doing to reach those sort of net zero goals?
Yeah, great. So we're doing a lot. Ideally for Northern Star, 70% of our Scope 1 and 2 emissions are from the primary energy generation or consumption and purchase that we put into our mines. I think it's like that because we're largely underground focused, so it's ventilation fans, it's not really big open pit fleets. Super pit is one, but the majority of our production comes from that underground source. So our ability to reduce our emissions by 35% by 2030 is coming fundamentally from putting in wind and solar to displace gas or grid energy in Western Australia. And ironically in Pogo in Alaska, which is coal-fired through their grid, we'll actually get solar and wind to work very, very well in the interior of Alaska. So we're working on projects there as well to get that in place. But the difficult thing with gold over the journey has been short mine life. So the fact that we now have 10 plus years mine life gives us the confidence to put the capital and infrastructure in, and the portability of some of those solar fields and that you can put in now that you can relocate helps with that. So I think the gold sector generally is very aware of the metrics that are set, and I think they're all trying to compete to get there sooner. I think that's healthy competition. Ultimately, they'll need some sort of offset at the last sort of 10% to do the final net zero piece. But electrification for us in Australia comes after, electrification of our fleet comes after the primary power being clean and green in the first instance. There's no point putting an electric fleet on the back of a coal-fired power cord. Thank you.
Thank you for your speech today. Alex Hay, Orbinet. My question is, you've invested in takeovers around the world. What about Victoria? When might you invest in Victoria, and what's preventing you coming to Victorian gold mining?
Victoria? Didn't you just put in a 2.5% royalty ad valorem? What did 2.75? It's hard. Gold in developed areas. No reason, honestly, no reason why we wouldn't come to Victoria. Great place. I'm saying that because I'm standing here. Has a great history and has ability to yield multi-million ounce high-grade systems in the future. So yeah, it's around weighing up options, and the beauty for us in Northern Star is options. So if you kind of look at our underground grades in Western Australia, we're mining between about 2 and 4 grams per tonne head grade. Pogo's 8. Most North American mines struggle to make a margin below 10 grams per tonne. So for Northern Star, some of those opportunities offshore, that sweet spot, 5 to 10 grams, we can turn up and do some, better maths and get a better profit out of some of those deposits that will get sold for not much and be parked up. So, and they're, Tintina Belt, there's some massive multi-million ounce systems there. But look, Victoria, it comes back to your structure, your taxes, your labour pools. No objection whatsoever, but you've got to find it first, and it's got to typically not be under Peter Bartlett's farm, like Chalice learnt. I think they paid more for Peter Bartlett's farm than Twiggy paid for Minderoo Station back from Peter Bartlett. So, yeah, I don't know who owns that land above the gold mines in Victoria, but they are the challenges you need to unlock, and it's much easier being out in the desert than in more populated areas. Oh, sorry, yep.
Thanks. Stu, Gavin Collery, with the icon of gold mining in Australia has for such a long time been the super pit. It's sort of like Disneyland for so many of us.
And for me.
When you wake up in the morning, you must have dreams and visions about where you could take this thing, because it's such an icon. Share with us those dreams and visions that you have of where you might take the super pit, not in the immediate term, but over maybe the decade.
Yeah, and look, let's say 90, 92, 94, I was in those lecture theatres, and every time they'd blast the super pit, it would shake and reverberate the lecture theatres we were sitting in. So we were very aware of its presence in Kalgoorlie from an early stage of my career. But being fair-skinned, I opted for shade, and I focused on underground, and I didn't go into open pits at all, and I wanted to stay in the dark. But I see there's a 60 million ounce system there, 80 million ounces across that gold mile, sort of been mined over 130 years. So the bottom of that pit only comes down to about 800 metres, or about 650 metres now. The old workings, and I say old timers, but the old workings, those shafts go down to about 1.4 kilometres, and the ore body absolutely extends beyond that. There's holes down 2 kilometres. We're mining 1.3 kilometres at Kanowna Belle, 25 k's away. So I see a major underground, a cave or a low cost per tonne caving mining method. The shadow of the cave comes back up into the pit, so technically it doesn't destroy the racetrack, so Kalgoorlie race rounds can still happen. There's a few things there that I absolutely believe. The early stage, the getting the drilling, knowing the size of the prize, not just getting in and picking out the eyes of it, being patient, and it's a big beast getting through that. So we put the first new portals in the northwestern wall last year, got a big drill drive over a couple of kilometres long, drilling out one quadrant. We've just added 5 million ounces of inferred resource, 2 grams, just in one quadrant up above the pit floor. So this thing's going to be there for a very long time, and it'll certainly be there throughout my retirement. So I want to make sure that the people working on this are working for that long term, and our shareholders are going to enjoy the value creation. This is going to be a cornerstone tier 1 asset for decades and decades to come. The northern extension of the pit can still, northern and southern extension on strike, we've got some great drill results there. But fundamentally, it's going to be a massive underground for decades to come. And there's 30-odd thousand people still obviously in Kalgoorlie, and it underpins a lot of the jobs and the businesses into that sector. Thank you.
Thank you. So I'd just like to welcome Patrick Smith, MD and CEO of EmCee Consultants, to deliver the vote of thanks.
Thank you, Stuart. Thank you for sharing your personal journey, giving us insight into your thought process, what drives you, what is important. I agree contractors have a role in the mining industry, driving innovation and productivity, with a focused simplification that delivers success. The takeaway for me is your fundamentals formula, simplifying the thinking process to identify and deliver success in the mining industry. Revenue, costs, people. Members and guests, please join me in thanking Stuart Tonkin. Congratulations, we have a gift. You'll never guess what it is.
This is for a mining engineer to get an S-Wing GeoPic. Mike, you'd know what one of these are, given you're a geologist. I've never had one. This is fantastic. Appreciate it. Thanks very much for today.